This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
10 a.m. in London, 5 a.m. in New York, and that means it's 5 p.m. in Hong Kong. Our top stories today. Will today's much-anticipated U.S. jobs data create even more turbulence for treasuries? The stakes are high as the 30-year bond heads for its worst week this year. The number, of course, drops at 8:30 Eastern. Wins and zeros. Big tech becomes binary. Amazon stock surges as e-commerce feels a big beat, while Amazon's top line disappoints again. Plus, crude is heading for its sixth week of gains. OPEC Plus will review oil markets today in the wake of Saudi Arabia's decision to extend output cuts to September. So, welcome to Bloomberg Surveillance, the early edition. I'm Guy Johnson. I'm, of course, stepping in for Danny Berger in London. Kriti Gupta is, though, in New York. Kriti, let's talk about these markets.
Yeah, a little bit of green on the screen, Guy, which is interesting because, one, it's a Friday. Two, it's been quite the week for a lot to digest. You would think that maybe everyone would cash out, reset, and you're seeing the exact opposite this morning. Futures higher by about 0.4%, perhaps following the sentiment you saw in Asia overnight. NASDAQ 100 futures outperforming, though, and I think that's the real takeaway because, of course, you did have those Apple and Amazon earnings after the bell yesterday. Two different stories, two different results, and yet you are still seeing green on the screen when it comes to the NASDAQ 100 higher by 0.5%. Guy, we're going to dive into those stories and really what sticks out. I have a lot of thoughts in just a few minutes, but again, the bond market also crucial. You mentioned that payrolls data that we are waiting for in just a few hours. Well, that's going to have a real read through in terms of the bond market. Is the Federal Reserve's monetary policy regime, the idea that they might pause again in the near future, going to really be the success story they think it is if you start to see another hot labor print? That's going to be top of mind, especially for the two-year yield, which is already higher by about 4 basis points. So a little bit of bond volatility seeping into the story this morning. 492, we'll call it. Two-year yields getting closer and closer to that 5% level once again. So technicals playing a role. And Guy, we don't talk a ton about commodities at about 5 a.m. in the morning, but I think it's worth doing. Brent crude at an 85 handle, higher by 0.5%. How much of that is a function of the risk story as opposed to the supply and demand story? Perhaps both working in its favor this morning.
You clearly need more Alex Steele on this show. Let me point that one out. The commodity story, I think, is fascinating and will be going forward. Look, there's all kinds of things to talk about in Europe this morning. It's actually a fairly exciting Friday as we build you up to that payroll number. Stock 600, the technicians are getting excited at these levels. Remember, we've come down. We were testing the support on the upside. The resistance on the upside. Now we're testing support on the downside. 458. We're up by 0.2%. There's a lot of single stocks out there that are worth focusing on. But before we get to them, let me just point out as well, we've had a big number out of Germany this morning that is just kind of adding a little bit into the story we're watching in the bond market right now. German factory orders come through, highest level in 3 years, plus 7%. The French number not so good, but this German number is really interesting, though it does fly in the face of the PMI data we're watching at the moment. And then we come to the single stock. So let's talk about what is happening here. Wire and plastic products, WPP, the ad giants. Why am I pulling this one out? Because it ties into our next story. They've reduced their guidance for the full year. The stock is down by 7% at the ad giant. The reason for it, they are seeing lower spending from big tech, which I think is fascinating, Kriti, in the light of what we've had overnight from Apple and from Amazon.
Yeah, the business investment story isn't getting as much attention as perhaps it should, as we talk a lot about the consumer stateside. And a lot of that, to your point, Guy, folds into the stories you got from Apple and Amazon last night. Diverging reports from two of the largest tech companies in the world. The iPhone maker facing its longest sales slowdown in decades, while Amazon giving a positive outlook on strong e-commerce sales. Amazon CEO Andy Jassy spoke on the earnings call yesterday.
I think that the business has grown to be pretty large already. And I still think we only have a fraction of the features that we need. I don't think we're close to being done growing there, and that is a very strong area of focus for our stores team and for our senior leadership team as well.
And of course, at its core, Guy, is the story of e-commerce, but it's also a story of cloud as well. To me, I think what's so interesting about Amazon is that you can interpret it in so many different ways. Don't make me nerd out about their shipping component as well, even their logistics business. But all in all, Amazon has had a really rough go of it in the last couple of years. After that post-COVID surge, comps haven't really worked in their favor yet overnight. They're really impressing.
Jesse is ruthless. He's been at this company for 2 years. He's cut costs massively. You can see that. I think costs have only gone up by 7.5%. They were going up by 30%. He's been ruthless. He's cut projects. That is now starting to shine through as well. The stabilization in the cloud business, I think, is really interesting as well. That's worth taking into the rest of the tech landscape as well. But this is a company that had to perform in so many ways. You look at what has happened with Amazon and Apple. You see multiple expansion this year. You need the earnings now to back that up. You got it with Amazon, didn't necessarily get it with Apple.
Yeah, and the Apple story is fascinating as well because, of course, they talked about currency strength and that this weakness in the market, again, they really tried to talk it down, but it really didn't assuage a lot of those investors down, about 1.7%. We're going to get more on that later in the show. Matt Bloxham from Bloomberg Intelligence joins us. And, of course, Sky, we didn't even talk about the bond market impact on all of this. We are getting non-farm payrolls seen rising about 200,000 this morning. The U.S. jobs data that coming off about 8:30 a.m. in the morning. And, look, this is less than the 209,000 increase in June. That's going to have a read-through onto the bond market, which again is going to have a read-through into the ripple effects for tech as well. Bloomberg's Valerie Teitel joins us now for more on what to expect. Valerie, this feels like a little bit of a game changer to kind of cap off a week that's been a lot of volatility, macro and micro.
What a crazy week for the Treasury market, especially this steepening move has really caught many off guard. Will it be sustained by possibly a hot NFP print? We're expecting 200K for the big number today. That's going to be the lowest we've seen since December 2021. Funny enough that at this point in the cycle, 200K is seen as a moderating print. We also get average hourly earnings expecting to moderate down to 4.2 on a year-on-year basis. That's going to be a new low if we do get it, a new low for this past year. So keep an eye on the earnings estimate. But really, Critty, it feels like the market is going to be quite hesitant to trade this number. There has been probably just a lot of positioning washout this week, maybe a little just less desire to put some big trades on. It is August. Remember, everyone is looking forward to those holidays. And this is just not this isn't the last NFP print before the Fed meets again. Remember, we get 2 NFPs and 2 CPIs before the Fed convenes in September.
Do I care about this number or do I care about CPI next week? Do I care about the auctions next week? Is this just a holding story today? Do I really care about that CPI number next week? Because that could really upset the apple cart.
Look, I think the market is going to have a less tendency to react strongly to this because we do have one more coming before the Fed meets again. But that being said, Guy, the market is very skittish. This long end move has caught so many off guard, this steepening that you normally don't see at this part of the cycle. And it's especially rare to see this kind of move anyway, this bear steepening that we have seen with 10s and 30s hitting new highs since September. It's going to be an interesting print today. I do want to look forward to the refunding announcement, refunding next week. We have $100 billion issuance next week, 3s, 10s, and 30s hitting the market.
I think it's those kinds of numbers that are beginning to freak everybody out. It's the scale, particularly the duration, that's coming to the market that I think is beginning to really freak this market. Valerie, great stuff. Thank you very much indeed. We'll look forward to that number. It drops at 8:30 Eastern. Some great coverage coming up from the surveillance team. Let's talk about what the earnings picture looks like as well, because this kind of macro story folds in to what we've just been talking about as well. So we get another earnings beat coming from A.P. Moller-Maersk. However, this comes amid a slowdown in shipping demands. The pandemic was all about goods. This company was roaring. Now it's slowing down. The company lowering its outlook for the global container trade. It moves around a sixth of global containers around the world, adding that there is no major signs that volumes will recover this year. This is what the Maersk CEO had to tell us a little earlier.
Our case is not for a recession, but it is for a really subdued environment that will continue for the rest of this year, and something that we will have to review a little bit when it comes to our expectations for 2024, but certainly not a strong rebound.
The Maersk CEO, in some ways, confirming what we already kind of knew. We saw this huge boom in goods during the pandemic. That has now shifted to services. Maersk is probably one of the victims of that, one of the most obvious victims of that. Bloomberg's Copenhagen Bureau Chief, Christian Weimer, joining us now. Christian, you just came from the earnings call, the press call. What do we learn? Tell us about what came out of that call. What are they telling us about the macro picture particularly? They're such a good company to tell us how the global economy is doing.
Yes, if I'd highlight two things, then one thing is the macroeconomic slowdown, as we all know, is happening, and Maersk is better positioned than most other companies because they operate in almost every country around the world. The other thing is the destocking that's going on in the global economy right now. During the pandemic and also in the immediate aftermath, companies were filling up their warehouses with consumer goods, partially in response to the supply chain problems that they had faced. Now they're emptying these stocks, and that means that they're not ordering new consumer goods in Asia for their customers in Europe and US, and therefore they're also not transporting them. And that's bad news for a company like Maersk, which transport goods, but also bad news for some of the producers.
And Christian, to your point, you're seeing that narrative essentially kind of ripple through the likes of UPS, FedEx, even DHL, really talking about that they're having to kind of cost cut or lay off people as a way to deal with that challenging environment. What is Maersk's solution to that?
Yes, I would say that the good news for Maersk is that they were well prepared for this. They knew that this would happen, and they had flagged that also previously. What they've done is that they last year, they tied a lot of their customers into long-term contracts. That capped the profits a little bit last year, but now they're getting the benefits from that. The other thing is, as you mentioned, the cost cuts. And Maersk already started looking at cost cuts before the boom period ended because they knew this was happening. They haven't, however, announced large job cuts, but we'll see what happens.
Hey, Christian, thanks for jumping off the call and coming to talk to us. We really appreciate that. Christian Weinberg, Copenhagen Bureau Chief here at Bloomberg. Thank you. OK, what do we got coming up for you? We need to talk about what is happening in the crude market. Oil heading for its longest weekly winning streak in more than a year. It is 6 weeks up. We'll have more on that story. We're going to get more on the job story as well ahead of the payroll number. Sarah Hewen, head of Europe and America's research at Standard Chartered, is going to join us later this hour. Plus, our special coverage from the Aspen Economic Strategy Group continues today. Wall Street Week host David Weston is live on location, talking to a bunch of policymakers and executives, including Fed President Austin Goolsbee. Looking forward to that later. This is Bloomberg.
Making M&A transactions in the field of wealth management is not a new strategy, but we conceive these operations, as always, as simply a complement to the capacity of growing organically. And our wealth management business, Indus Wealth Management, is growing organically quite significantly, and we thought that this opportunity of acquiring the group Peter Carm would be a nice complement.
Wealth management seems to be where it's at. Jérôme Grivet, the Deputy CEO of Crédit Agricole, speaking exclusively to Bloomberg, talking about the bank's quarterly results and that acquisition, that stake acquisition of the Degroof Petercam in the wealth business. Leo Kane joining us now. Leo Kane Sherpa joining us now. Leo, there's a lot to take away out of this. You've got the numbers to deal with, what's happening in the underlying business, plus you've got this wealth management acquisition as well. Walk me through what really stood out.
Yes, exactly. It was a bit of fireworks this morning. I didn't expect that many news from Crédit Agricole this morning, to be honest. Yeah. But the highlight was definitely this wealth deal for the Degroof Petercam, because it really shows how lenders are trying to gain scale in the wealth space. Yeah. It's a no-brainer for them, really, because it provides them with stable fees, more stable fees, and just makes them less dependent on interest rates.
How does that compare then with the Continental story? I mean, when you compare this to the likes of Deutsche Bank, et cetera, what are we seeing?
Yes, exactly. So Deutsche Bank was definitely among the highlights again this earnings season. Their fixed income trading was quite resilient, better than some Wall Street peers, which is always quite key for Deutsche Bank. But their share buybacks have sort of underwhelmed a little bit, and shares have actually taken a hit since results came out last week. And we've seen the same with Commerzbank this morning, actually. Shares were slightly down because they didn't give a firm announcement on buybacks, didn't give clear guidance on buybacks for the second half. So that's one theme for European banks this season.
We're going to get a strategy announcement from them coming up, so I do wonder whether that's why we have the caution from Commerzbank maybe on that. Look, I thought Commerzbank was interesting in as much as they're talking about the tailwind that is still coming from higher rates. That's net interest income. That story is still positive for Commerzbank. It's interesting to hear what UK lenders are talking about because they're being much more cautious. Is that the canary in the coal mine?
Exactly. So when you keep in mind that the BOE has started raising rates much earlier than the ECB, more than 6 months earlier, I think that it's fair to assume that there's going to be some downgrades in expectations for European lenders as well. So that's definitely something to watch for the second half.
Great to see you, Leo. Thanks for stopping by. Really appreciate it. Leo Kane Sherpa. I got it all in this time. Thank you very much indeed. What are we going to talk about next? Let's talk about the oil market. Crude is on its way to its sixth straight weekly gain. OPEC Plus extending production cuts, Saudi sounding pretty hawkish. We'll talk more about that next. This is Bloomberg. So this is Bloomberg Surveillance. This is the early edition. I'm Guy Johnson in London, in for Danny Berger. Crude Gupta, of course, is still in New York. Let's talk crude, and figure out what is happening here. Because the oil market is up again. Longest winning streak since all the way back in June last year. I think we're up 6 weeks now if we finish higher today. Later today, OPEC Plus will review the market. This, of course, in the wake of Saudi and Russia's decision to prolong output cuts. A little bit of a warning in there from Saudi as well, that potentially we could see further cuts coming through. There is much to discuss, because this, again, folds into the macro story and folds into this inflation narrative the bond market's freaking out about. So let's bring in Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy. Will, the last 6 weeks, the floor is in, it seems. The cuts are working. There is a higher floor now being set. What does that tell us about, though, where we go from here? I was talking to Pioneer earlier on this week. They're talking about $100 by the end of the year. Is that now looking likely?
I think most people would hesitate to say that looks likely. I think it's clearly possible. I think you're right that we've had a change in the oil market narrative over the last 6 weeks, and in the early part of the summer, people were feeling quite bearish, and that was mostly a macro-driven trade. And the Saudi policy in particular has succeeded in turning that around. And importantly, demand has remained very, very robust. We heard from the BP CEO earlier this week, who said that demand has been incredibly robust, that we're going to add 2 million barrels a day this year. And he expects demand to grow more strongly next year. So I think that's what surprised a lot of people, in that in the first part of the year, people were gloomy about the macro outlook, what that might mean for oil demand. And those fears, frankly, have not materialized. Demand around the world, for now at least, looks fairly strong. And we put that together with the Saudis' decisions that are tightening supply, and that's what's underpinning this rally.
Well, Will, to talk to us then about the extent of that demand really being a gauge for the world's economic story. Look, I think the consensus here is around the world, I should say, is that the recession we were planning for might be farther away than we thought. The momentum that a lot of consumers are showing. But if you are seeing the market kind of guided by these cuts, to what extent is the oil market, or is trading oil still a statement on the macroeconomic picture as opposed to a statement on the Saudis?
Well, you've always got to consider it from both parts. I mean, if we take supply first very quickly, I think supply was very ample in the first part of the year, and perhaps more than people were expecting. We saw a lot of oil from Iran. We saw oil from Venezuela. Russia wasn't really cutting production as much as some people expected, although there's been a little bit of a change there as well. And then Saudis came in, and we agreed some cuts among OPEC members, and then came on with this big voluntary cut, which has really obviously turned the balance. When we go to the demand side, demand has been more robust than everyone was expected, and that's clearly true. So what we've got now is a tightening supply situation and a robust demand situation, and that's why we've seen this 6-week rally. There is one caveat quickly, though, which is that people are a little uncertain about the outlook in China for demand. I mean, there are some ideas that we may see some weakening in demand there, and clearly the numbers have not been great out of China economically.
Yeah, that's a critical factor. Can I just take it back to what is happening in the US and to a certain extent in Europe as well, though? Gasoline prices in the States have risen really quite sharply recently. Is that trend going to continue? Because that has a massive impact on consumer expectations around inflation. what's happening with diesel as well? Diesel seems to be really interesting right now because, again, that's quite a big tell on what's happening with the economy too.
Yeah, I mean, gasoline is strong around the world. There are several factors driving that. I think in the US that, people are commuting more. And that means in the US, people drive to work. And that's clearly driving some very strong gasoline demand numbers. In Europe, there seems to be this trend that people are turning their back on diesel cars and going back to EVs to some extent, but also to gasoline demand. And I think that accounts for some of the stronger gasoline numbers we've seen in Europe. And then on the diesel side, diesel is a more industrial story, and it's not perhaps quite as exciting as gasoline. But despite some of the weakness that we see in the industry in Europe, the recovery remains fairly strong in the US, and there isn't quite the amount of weakness that people were expecting. So, yes, gasoline is very strong, and I do think that could become an important economic story going into the winter, because if you look at gasoline prices, come September, we may be looking at year-on-year gains in gasoline prices.
And that's going to show up in the inflation numbers, and that's going to be a big factor. Will, that's a really important point. Will Kennedy, thank you very much indeed. Coming up, Sarah Hewen's going to be joining us from Standard Chartered. We're going to talk about the payroll number. That's next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Today's much anticipated U.S. jobs data could create even more turbulence for treasuries. The stakes, they are high as 30-year bonds head for their worst week this year ahead of a wave of issuance. And it's a tale of two tech giants. Amazon rallies on a positive outlook fueled by its e-commerce business. Apple, on the other hand, slipping on disappointing iPhone sales. Plus, crude climbs. OPEC Plus due to review oil markets today in the wake of Saudi Arabia's decision to extend its output cut to September. We're going to go drive all the market moves. I'm Kriti Gupta in New York with Guy Johnson stepping in for Danny Berger in London. Guy, a lot to digest, but it really feels like you have your eye on the commodity market perhaps after all the volatility in the bond market this week.
Look, I think they're all very much the same story, actually, I think, and that's the interesting part of what is happening here. Commodities are rising, particularly gasoline, which I think is really worth paying attention to, which feeds into this narrative about higher inflation. That seems to be maybe what is behind this move we've seen in the bond market this week, this concern that maybe inflation comes back and is more sticky. Equity markets have taken a beating this week. Today, we see a little bit of firmness coming back in. But it's really fascinating. European equities have tested resistance. Now they're testing support. So the stock 600, we're trading at 459. The technicians see this as being quite an interesting level. We're up by 0.2%. There's a lot of single stock news. We'll come to that in just a moment. You've also seen German factory data today. Factory orders coming through, plus 7%. That's the biggest number in 3 years. It feels a little like an anomaly to me. You look at the French number, there's weakness there. You look at the PMI data, there's weakness there. We're going to get more data out of Germany over the next few days as well. But nevertheless, the bond market reacting to that. But it has been a big week for the bond market, driven by the long end. You've had this bear steepening, which is not normally what you would expect. WPP, the ad giant, down by 6.3% today. Why is that interesting, Kriti? It's interesting because what they're talking about as they've cut guidance is a lack of spending coming through from big tech, which I think is fascinating in the light of what we just heard from Amazon and Apple.
Well, speaking of that big tech story, Guy, you're seeing the outperformance here in the States as a reflection of perhaps specifically Amazon, because I don't think the diverging story from Apple is really having that much of an impact. It's interesting to me, though, that even though Apple, this massive company, this $3 trillion company, isn't having a bigger macro effect. Nevertheless, futures higher by about 0.5% stateside, 45.42 for our radio audience on those contracts. But again, like I said, the outperformance is in the tech sector. NASDAQ 100 futures higher by about 0.7%. We're going to dive into that diverging story in just a few minutes with Matt Bloxham of Bloomberg Intelligence. He's going to tell us the similarities and the differences between the Amazon story and the Apple story. It's one you don't want to miss. But of course, even the tech story is going to be subject to what's going on in the bond market. And the two-year yield really comes into focus there, because already you are seeing a 4 basis point move higher this morning, 492 on the front end of the curve. And look, you have a wave of issuance next week. So there is going to be volatility priced in terms of digesting some of that. But you also have that payrolls data in just a couple of hours, CPI on Tuesday as well. So a lot for the bond market to digest if we get another hot payrolls report. Do we see that two-year yield penetrate the 5% level? That's going to be crucial. And of course, Guy, Brent Crude, your favorite, an 85 handle on that commodity.
Alex Steele's favorite, not my favorite. clearly rubbing off, though,
Yeah,
which I'm not sure is a good thing.
Influence.
Do you see her in the... She clearly has. You see her in the cowboy hat yesterday. Looked great. I think the bond market's doesn't have things to digest. I think it's just got indigestion at the moment. I think that is one of the key factors that we've had to really think about this week, and that big move we've seen at the long end. Today's payroll number is certainly going to be fed into that narrative. So it comes out at 8:30 Eastern, of course. Non-farm payroll seen rising 200,000 in July. Remember, that's still a strong number, slightly less than the 209 increase in June, but I think we're going to see a lot of revisions. Sarah Hewen, Standard Chartered, head of Europe and Americas Research, joins us now on set. Very nice to see you.
Nice to see you too.
What are you anticipating?
We think we'll be below 200,000. I mean, we had a weaker than expected number for June, and we think that we're seeing a normalization of the labour market in the US at the moment. So we think we could see a 170 handle. Obviously, that's weaker than the consensus. It's weaker than the whisper number, which actually has nudged up over the course of the past few days. I think, it's going to be an interesting report. For us, the focus is average hourly earnings, what's happening to wage growth.
And what do you see there? Because there's a whole bunch of things below the surface that are always worth watching out for. Participation's always interesting. What's happening with hours worked? And as you say, what is happening with wages? Pull that all together for me.
Yes, I mean, hours worked have been fading over the last few reports, and I think that that's also indicative of a normalization of the employment situation. Participation, it's risen, but it's still not where it was before the pandemic. So you still particularly have older workers who are still outside the workforce. So they're part of the labour demand-supply imbalance that Powell likes to talk about so much. In terms of average hourly earnings, I think it is worth watching, because year on year we haven't really seen a further downtrend. Compared to last year, obviously, there's an improvement, but for the first 6 months of this year, it sort of ranged between 4.3%, 4.4% year on year. And actually, since February, if we look at the monthly data, those have been nudging up month by month. So I think it is a bit of a warning sign. It's obviously what Powell was looking at in previously, the concern that that was going to be driving underlying inflation higher. Our own view this month is that we see it nudging back to 0.3%, so that's broadly on consensus.
Sarah, what has more weight, though? For example, if you see a weaker payrolls number but a stronger wage growth number, is that interpreted still as hawkish, or is that a victory on the jobs market?
It's a bit of both. I think that market would be somewhat cautious if we do see earnings growth rising again, even if we do see payrolls dropping. Having said that, the payrolls numbers really for the last couple of years have exceeded expectations. So a second consecutive month of lower than expected payrolls growth, I think, would be regarded as quite significant, and suggesting that we are seeing a slowdown in the payrolls numbers and a slowdown in the labour market overall. We've got unemployment, of course, as well, and that's a bit of a wild card. It'll be influenced by what's happening at the household survey employment numbers. We think that it'll level out around 3.6%, which again historically is still very low. If we look at all these numbers compared to the pre-pandemic period, then it's difficult to say that the jobs market is anything but buoyant.
Sarah, right now we are getting a lot of headlines from the labor movement in the United States and arguably around the world as well. Guy knows that I've been following it very closely. Overnight, we got news and reports that the United Auto Workers, which is dealing with some of the automakers here in the States, asking for a 40% pay hike. Talk to us about the stickiness of those wages. Is that something you're interpreting or factoring in to your models when it comes to kind of how strong the labor market still will be?
It certainly is. Of course, we've had some good news in terms of employment costs, unit labour costs. So what's happening to productivity is very important as well. And the second quarter data there were encouraging. It suggested that labour cost pressures are easing. That should allow inflation to continue to trend lower. But at the same time, when you still have very high vacancy levels, then wage demands are likely to be higher. what's interesting to us is that we haven't seen, with payrolls numbers so strong, that we haven't seen stronger wage growth. We do query whether the payrolls numbers are telling the real story. We think that they may be overestimating how strong the labour market is in the US at the moment.
Well, if you do start to see that weakness in the labor market materialize, as you point out, and as you are forecasting, at least for this report, is AI, for example, a way to fill that gap?
We think it certainly is. We've done a lot of work on this. The productivity improvements, the productivity gains from AI are going to be significant in the coming years, and that should be good overall for growth. Of course, it is risky for some sectors of the labour force, and we're expecting to see more tensions emerge as a result of that. But overall, AI productivity should underpin stronger trend growth across the world, particularly in developed markets.
Sarah, can I get your take on what happened yesterday over the road at the Bank of England? We're in restricted territory now. Does that mean the Bank of England's done?
Nearly done, nearly done. I mean, we think that we'll probably see a hike at the next meeting in September, possibly November. What's interesting is that I think yesterday's press conference raised a question mark over whether you would go all the way through to November. Yeah. Our own view is that we see 575 as the peak in rates, and market seems to have adjusted expectations down to 575. So data dependency, of course, that's the mantra for all central bankers now, but particularly for the Bank of England. What happens to inflation? What's happening to wage growth? You've got both moving in somewhat sort of different directions at the moment, but wages do need to slow if we are going to see inflation enduring at the 2% target.
Yeah, a lot to digest there. And of course, cable as we speak at about 127, the strength in the pound, both a positive and a negative. Standard Chartered's Sarah Hewen, we thank you as always. Coming up, we go to the micro. Apple and Amazon wrapping up big tech earnings with mixed results. More on that next. This is Bloomberg.
The results reflect the fact that the environment is challenging. Consumers face pressure from general interest rates, higher inflation, and so there are a lot of cross currents that Apple, like all other companies, cannot outrun.
Daniel Flack, senior research analyst from Neuberger Berman, speaking about Apple's results, which came out last night. The iPhone maker posting a third straight quarter of declining sales, predicting a fourth. Amazon, though, generating strong revenue in its core sort of e-commerce business. It's dropping down to the bottom line. That's the critical bit with Amazon, because that hasn't really happened before. Matt Bloxham of Bloomberg Intelligence joins us now. Let's start with Apple. Massive multiple expansion recently. Stocks had, I think going into the number, it's up 47%. Is there any good news? Is there enough good news? Is there some good news in there to justify that multiple expansion? Because I'm looking at the stock this morning and I'm questioning it.
Yeah, I mean, there's definitely some good news in there. Whether it's enough, we'll have to wait and see. And I think the good news, particularly around switching. So they said that the June quarter was their record quarter for switches into that iPhone ecosystem from Android, and they expect that to continue. And I guess linked to that, China was a bright spot for them in the quarter, and they said switching in particular is a big opportunity for them in China. And then on top of that, you've got India, where historically been a very Android market, and they've been doing a lot of investment into the Indian market recently. So with a broader lineup with some cheaper handsets, maybe India's another growth opportunity for them. So if you're bull on Apple, I think it's those things you're clinging to that can make you feel comfortable that this kind of growth headwind is going to reverse maybe over the next year or two.
I think I must give you another question.
I was waiting for you to step in. Apologies. Matt, talk to us a little bit about kind of the dollar strength story, especially when it comes in line with services idea. I think what's so interesting is that Apple specifically said there is that strength in China. When you look at some of the tech peers, and everyone is saying it's weaker there. Why is Apple standing out in China?
Well, I think it's because there's still this kind of aspirational consumer there that, it's historically been a very Android-dominated market, but, with a kind of broader lineup of phones and with greater investment focus there, there is still a big opportunity for them to encourage people who've got more money in their pockets to switch from cheaper Android-based devices into the Apple ecosystem. Now, obviously, some of those Android devices, particularly the kind of local Chinese brands, do have kind of technology innovation ahead of Apple. So as they kind of catch up, and we'll have to see what the iPhone 15 has to offer, that might be another catalyst for them to kind of continue with that switching and gain share, essentially, in China.
Well, another piece of the Apple story that I think really relates to the Amazon story is simply this massive divergence in goods versus services. The goods part came down pretty significantly, but their services revenue, a real standout. Matt, if you apply the same logic to Amazon, shouldn't you see that weakness in e-commerce and shopping there as well?
Do you mean in terms of Apple or
in terms of Amazon? But if you're seeing this broader pullback in goods consumption, why is Amazon the standout?
Well, I think, there's definitely kind of a switch to own brands, but, I think Amazon's retail, online retail is such a kind of broad universe that there's an opportunity there for consumers. And I think a lot of consumers, their first thought is I need to kind of downshift what I'm spending. Where do I go? I go and look at Amazon. So I think they see that as an opportunity, and they saw 4% growth in retail, which is one of their strongest performances for a while. And I think they continue to see that optimism. It was cautious optimism, but I think they are a good they're a good platform for people who are shifting to spend on better value products.
Is Amazon just a different company now? It used to be a company for years and years and years, massive top line. That top line then gets eaten in the middle because of all the spending they're doing, which was huge, and then there was no bottom line.
Yeah, that's right.
But that's different now.
Exactly, and I think particularly on the kind of online retail where, they spent dollars and dollars and dollars on the retail fulfillment, and that, I think they kind of got a bit carried away with that. Andy Jassy has been really kind of reining that in. They're moving to this regional model for their fulfillment services. That's delivering real margin benefit for them, and they expect that to continue. So it's been a lot of hard work, but with headcount reductions, a reorganization of how they do this fulfillment, that's definitely giving them a lot of payback. We saw that operating margin was 60% above consensus expectations of the quarter, so it was a big.
And how much more is there still to come on that front?
Good question, but I think there's still more to come here. That they're kind of their forward quarter guidance on operating margin ahead of where the market is, and they certainly were giving optimistic commentary that as they continue with that regionalisation strategy, you're going to see more benefit. Also, on top of that, the Amazon Web Services business is hugely profitable. It's 16-70% of sales, but it's almost 100% of the profit, and that's continuing to grow in a double-digit momentum. So there's still operating margin potential for them in the cloud business too.
It's going to be interesting to see how these stocks open. We've got a fairly good early indication. Very different narrative on the stock market performance. Matt, as ever, fantastic. Thank you very much indeed. Matt Bloxham of Bloomberg Intelligence. Crude?
Yeah, a lot to digest there. I'm curious about his logistics business. We gotta go through all of that in just a few minutes. Coming up on the show, of course, a look at some of the market-moving events you're going to watch throughout the day. We've got the macro and the micro covered. This is Bloomberg.
That's sort of an unemploymentless slowdown, which is really what's going on, and we could talk more about it, but that's what's really going on is people are employed, they have money, they're spending money, and the Fed is trying to slow down the economy, and it looks like we're reaching a pretty good equilibrium.
That's, of course, Bank of America CEO Brian Moynihan speaking yesterday at the Aspen Economic Strategy Group to David Weston. Special coverage continues from that meeting. Today, we've got some fantastic interviews coming up. Atlanta Fed President Raphael Bostic, Austin Goolsbee will be joining us as well. Looking forward to both of those two conversations with David a little bit later, particularly in light of what we've got with payrolls coming up. Let's talk about what else we've got coming up today. Nicola earnings coming up ahead of the US market open. 7:15 Eastern time, of course. We're going to hear from BOE Chief Economist Hugh Pill. He's going to be briefing as well the agents around the UK. We've got key OPEC members scheduled to review the oil market and an online monitoring meeting at 8 a.m. Eastern. That, of course, after we see Saudi and Russia continuing the cuts. And then, of course, the main event. Jobs Day in America. Jobs Day in the USA. The latest report out at 8:30 Eastern, Crude.
got a good rhyme to it, I think. When we have every Friday or every first Friday of the month, I should say. That's the macro story, Guy. But of course, it's going to impact everything that's going on in the micro, which brings me to some of the stocks we're watching in the pre-market this morning. We got to hit those Apple and Amazon stories. Because again, a tale of two tech giants. Apple dropping. We of course talked about this. The slowing iPhone demand, not really making that kind of progress. Also, not seeing really a light at the end of the tunnel. Potentially seeing that weight lead into the next quarter as well. And Amazon, a completely different story, higher by 9%. Guy, it feels like it's about time that Amazon kind of came back a little bit. It's really been the underperformer of a lot of its tech peers.
Absolutely. And actually, I think we've been waiting even longer than that. As I keep saying, Apple used to be a company with great top line but terrible bottom line. Now it's got both. And that is a huge shift for this company. Jassy's made a massive difference.
He really has. And I think when you come to kind of the AWS versus e-commerce space, you also have to factor in the fact that Amazon has a massive logistics business as well. It's the reason they can do things like Prime subscriptions or 2-day delivery. And even that part of the business is really struggling. So, of course, we're going to keep an eye on that as well. A couple of other stocks to keep an eye on, Guy. Cybersecurity firm Fortinet also down this morning. And leading, by the way, the entire cybersecurity complex down lower as well. They're basically saying deal delays are the issue here, down about 18%. It's a story of a lot of demand, not a lot of capacity, which really puts pressure on the stock as well. But to the other side, you have the likes of DraftKings. Gambling, sports gambling, very much in focus. I think on the European side, you're seeing a lot of those European stocks higher as well, leading, or I should say taking DraftKings lead, higher by about 14%.
So Entain is up. I'm just looking at Flutter right now. These are two big companies that in some ways compete with DraftKings, and therefore the overlap is quite significant. So Flutter's up by 2.83% today. Entain is up on the back of these numbers as well. So that story is certainly translating across to this side of the Atlantic.
Yeah, it's an interesting one. These are global stories. I mean, look at the trends that are really kind of making their way through in the sports betting complex, but also in the cybersecurity complex, as we talked about as well. Guy, I want to throw one last one at you. Coinbase this morning, those shares moving as well. Their quarterly revenue topping those estimates. It is higher this morning by about 1.3%. They're saying, look, that transaction revenue, it came a little bit under pressure, but we are still seeing volumes higher. And the impact here is that all of those crypto stocks, all of the miners, all of even Robinhood, which has about 60% of its exposure to crypto, higher following Coinbase's lead.
It's interesting, though, as well. You take a look at what is happening with Bitcoin. There's a bit of caution around that at the moment from a technical point of view, what has driven the rally, how much liquidity there really is in that space at the moment. I don't know. You talk to people in the space, the message I get, they are clearly sort of optimists, but there's a little bit of caution there as well.
Yeah, I think what's interesting with that is Coinbase specifically addressed that first half gain in Bitcoin really did help underpin it, but they also gave a little bit of word of caution that might not sustain. Nevertheless, it looks like investors looking through a little bit of that warning. Guy, this morning, a lot of micro to digest, but it's really the main event of the morning. That payrolls data coming up at 8:30 a.m. New York time. I believe 200,000 is the expectation, which you made earlier was the point. It's actually a lot relative to what we've heard in the past.
Where we are in the cycle, it's an awful lot. And I think it's going to be fascinating. Take a look at what happens with revisions. I think that's going to be really interesting as well. Take a look at what is happening with some of the underlying data. Participation is going to be really important. Wages are going to be really important. Hours worked, really important as well.
Yeah, a lot to digest. Of course, the surveillance crew is going to take you to it. That does it for early edition. Surveillance is ahead. Tom, John, and Lisa with an all-star lineup. Stick with us. This is Bloomberg.